Well, good weekend, all. I'm Epstein, and here we are with your metal market wrap-up, and this is your weekend edition, and we're now at the 15th of December, 2023, getting ready for our Christmas break and then our New Year's break. So you have a full week of trading, but Friday you'll get one of these funny days as people will leave, and you'll see that. In fact, you saw it at parts of the day today if you were watching the futures market. We got very quiet, then we get little bumps in the market, and then it would quiet down. This is typical of holiday trade. You don't try to make hay at this time of the year. You try to take the trades, be careful, and trade much lighter. That is typical. You come back in the first week of January. And because New Year's Day falls on a Monday, the traders will be back by Wednesday, and you'll be rocking and rolling on by Thursday and Friday, certainly the week after, but wouldn't surprise me if you're going right away. When that happens and you come back and you have almost a full week, a lot of traders, it's amazing how fast the markets get back to normal. Okay, let's talk a little bit. The gold market's bullish, period. It's over the 18-week average. This is a monthly chart. For the whole year, basically, you've been over the 18-month moving average, which has kept the bias to the upside. When you look at the weekly close, you have been back here. The October period, you got over right through here. You haven't given that up. Why? Because the market started looking for a change in interest rates. And we have been hearing about that as traders started saying, now, when is it going to come? When is it going to come? And you came out of the depths down here and crossed over. And as long as you're crossed over, you should have an upside bias. In that vein, I created my metal report. Well, actually, I did a currency report to go along with the metals that are making the moves and the other markets. And this is what it is. First of all, I use bar charts, and I use a lot of moving averages and slow stochastics on charts, along with Bollinger Bands. So this is what you're going to see. But to go with all that, I decided to put in this report. You're going to get both our seasonal analysis, and you're going to get price count. You're going to get weekly charts. You're going to get daily charts all through it. And of course, my commentary throughout the video is about 13 minutes or so long. On the seasonals, what I did is I looked on a 38-year period back, and I gave you the 30-year seasonal, the 15, and the 5. And then I really honed in on the 5. Why? Because of COVID. COVID's been in that 5-year period. It's come, it's peaked, it's now a non-market factor. And what is really going on? We in the financial markets are realizing that first the helicopter money going to zero interest rates, then tightening up to make up for that whole thing, and now coming back into a more normal pattern is sort of what COVID's done. You don't think they're masking each other to a degree? And of course, the financial markets are behind it, and they should be, because we didn't even know what COVID was. Now we do, and we know that we're treating it like the flu. It sounds crazy, but it is. You're going to get a vaccine if you want it each and every year. There'll be variants, but you're not wearing masks. The restaurants are open. Life is, in most cases, back to life, with the exception of commercial real estate, which may never come back. All right. People just don't want to go back into offices at this point in time. And companies that try to force them, well, if the labor pool shrinks or there's not as many people, then they got to rethink how they're doing it. Like a hybrid car is better than an all-electric vehicle right now, so is maybe that combination. But in any case, did all that. I put it together then with the weekly, the daily charts, talked about Israel, the Ukraine war, the impact it's having on the market. And as I said, it is time sensitive. Why? My reports are only up on my website for 3 days when I do these. You either look at it or you don't. I always get people, it's inevitable. Can I see some of Ira's old reports? And I'll share this with you. And I want to be as nice as I can. No, you can't. When I put them out, you look at them. That's how it works. My rules, my report, my game. And the reason is it's timely. It's not meant, oh, let's go back a year. Well, look, he was bullish then. The world changed. I had other reports. I was saying other things. This is for now. And that's why I do it that way. Not interested in this 3 months from now. I'll either come out and say, hey, we did this, let's revisit. Did I not do that in the stock indices in September? And then I did another one for you at the end of October. And I said, in that particular one, and got lucky, I said, I think this big decline is over. And it turned to be pretty right. Okay, well, what's the difference? You get right, you get wrong. The idea here is, if you want to look at it, iraepstein.com. Under the word research, the cursor up here, and if you have a question there, I did do mailings to everybody that's in my mailing list. So if you're there and you have an active email and you didn't get it, check your spam or junk, or then call my staff, whatever you want to do, or go to the website. It's the easiest thing. So in the gold, you're on a weekly chart over the 18-week average. I'm friendly. End of discussion. When you're under it, I'm bearish. When you're over it, I'm bullish. I'm really that simple of a guy, because it's a filter and tells me what I should be doing with my other work. And it's a master filter, believe me. I consider it a master filter of the market. When we look at how the chart action's gone, you had that huge week a week ago. You came down, and you probably now have gotten into the pattern where you're looking for what to do. Well, on the chart, what you have is a lower low and a higher high, so you're not trending just yet. Can that change? Let me explain how easy it'll be to change it. If this week's high of 2043.40 on a weekly chart is taken out, you'd have higher lows, higher highs. You're back into the uptrend. You're over the 18-week average, so the bias is already up. The resistance isn't going to change. It's going to be the upper Bollinger Band. Let's call it the 2070 area at this point in time. Momentum is not in your favor. Momentum is down, correcting an overbought condition from this whole rally that you had, and you're waiting. Now, it's also a funny week, all right? A lot of traders are going to get disinterested in things. They're going to be leaving for their family for Christmas. They don't want to look at the markets come a Tuesday morning. They'll want to see the addicted people will all turn in. I promise you, they're going to turn in, okay? But the volumes will be down, and they'll be that way from now through the end of the year. Your big volume weeks are probably behind us at this point. The gold-silver ratio still favors gold as the market is over the 18-week average of closes. In silver, I had told traders that they could be considering accumulation, not a trend trade, a whole different concept that my subscribers got to hear me give them the spiel about. And they were collecting it both on a daily and a weekly chart against this. We'll see if that works in any way. You are on the weekly charts in an uptrend. There's a method to my madness. Now, in the copper market, I'd be very cautious. You're coming to a zone where there's overhead resistance. You have the upper Bollinger Band, the 100-day average at the 392 level, and you're overbought. From my point of view, the way that I teach charting, that's a liquidation point on this chart. Same in the platinum now. You came up this week and you began, this is where you should have been taking money off the table. 963.70 if you had been in the trend. You know, on the dailies, I've been telling you I thought that it was friendly, and you're at that zone. Between the first challenge of a 100-week average and a Bollinger Band, it's enough. Markets don't get out of Bollinger Bands but 5% of the time. Now, when they eventually narrow in and go sideways like they're doing, they have to break out one way or the other. They're not going to stay sideways forever. So the narrower they get, the bigger the breakout. This isn't super narrow just yet. And last in the dollar index, well, the market dropped on the idea over the past 2 months, month and a half about, that the market was going to see the Fed pivot, and it did. Now you've gone to the Bollinger Band, and this is where the market's trying to find what? Profit taking from the shorts. I didn't say a trend change. I think the trend is locked into the downside. How do you come in? Well, that's what I show you in the morning, and that's what we talk about in this report that I just put out for you. So again, if you want to see what I was talking about, Special currency report on the dollar index. Move your cursor to the top, iraepstein.com. Under the word research, you can call my staff or look for the email. I'll probably send one out again to you tomorrow as well. Remember, it's going to be off the website very shortly. They're only up for 3 business days. I posted it yesterday. I'm Ira. You have a good day.